Sunday, the 13th of July, 2025, and I have been up since 2:30 in the morning doing so much research, uh, crunching numbers, looking at so much information. And before I get into the shares and ETFs that Mark Carney has, I got that information and I've been reviewing it. I've been putting it through multiple different AI programs, etc. And I will say that Grok has been superior to ChatGPT, which is really frustrating right now because I do pay monthly for it. And for some reason, like even just to get it to respond to a question, even one question, it takes a long time and then it has to reload and reload, etc. But anyways, before I get into that, I was also having conversations with a few people, again, since like early in the morning. And people that are of significant influence on social media platforms, and I understand why they declined at this time to talk to Wynn, who's the attorney from Ohio, who's covering Alex Jones and Sandy Hook, and this being a hoax. I have shared multiple videos on this as well, and potential conflicts of interest and how that could possibly impact the U.S. and then ultimately Canada as well, because whatever happens in the U.S. Oftentimes shortly thereafter it does impact Canada as well, and we tend to change our policies and regulations and rules, etc., based on that. And so, with this case ongoing, with the significance of it, I'm saying that with the America's Constitution, which is incredibly strong, and I think that it's being quite frankly like not really looked at or followed, and it hasn't been for many years, especially the First and Second Amendments. These are in jeopardy again with this ongoing trial, these hearings that Alex Jones has. And I do think, and so does Wynn, thinks that he's intentionally thrown these cases, and I don't understand why, because he shares a lot of good information on Infowars for people. But again, it makes me believe that he's possibly controlled opposition. And again, whether he realizes it or not, like he's going to be again impacting possibly the First and Second Amendments of the American Constitution, freedom of speech and gun ownership. Just to be clear about that. And so I'm just going to share from Grok that before I get into so many other things here. Let me see here. There we go. Okay. So I asked, in November 2024, Infowars was purchased by satirical newspaper The Onion, who said it planned to use the platform to promote gun violence prevention. Very concerning that they would do that. So is this true? And I'll reiterate, in places where they have the strictest gun laws, the only people they're helping are the criminals. Because again, 95% or more of gun crimes, they are from people that have them illegally and are illegal firearms. And you'll see in places where there's less strict rules and regulations on firearms, these are some of the safest places in Western countries, obviously, just to be clear. And so, yes, it is true that in November 2024, The Onion, a satirical news publication, announced it had won a bankruptcy auction to acquire Infowars, the far-right conspiracy website founded by Alex Jones, with plans to relaunch it to promote gun violence prevention. The acquisition was supported by families of the Sandy Hook Elementary School hoax actors. And again, look at my videos on that, and obviously on Wynn's as well, who won a $1.4 billion defamation lawsuit against Jones in 2022 for falsely claiming the massacre was a hoax. It was a hoax. And again, I know how this sounds to people that are just new to my channel, but look at all the evidence that I have shared, that Wynn has shared, that countless others have shared, and this is irrefutable. And it's deeply concerning that this has not made mainstream media. Again, not that I'm surprised yet, but it's important, because if your First and Second Amendment rights are going to be, quite frankly, shit on, after this trial as justifications to restrict these amendments, then I don't understand why more people in America are not speaking out on this. The Onion stated that Every Town for Gun Safety, a major gun violence prevention organization, would be its exclusive launch advertiser for the relaunched Infowars, set to transition in January 2025 to a satirical platform mocking conspiracy theorists and promoting gun safety messaging. However, a federal bankruptcy judge, Christopher Lopez, halted the sale on December 10th, 2024, citing concerns over the auction process's transparency and failure to maximize creditor value, including for the Sandy Hook fake families. The judge ruling put the acquisition in limbo, with no final resolution confirmed as the latest available information. Thus, while The Onion's announced intent to purchase Infowars and use it for gun violence prevention is accurate, the sale was not finalized due to judicial intervention. And I don't know when the next court hearings or case is going to be regarding this. And I don't know if Wynn does at this point. I'm sure he does. But again, I think this is incredibly important, right? And so a lot of people are distracted, and rightfully so. The right people are distracted enough, again, to keep on pushing for this Epstein client list. But again, I do think that we're also being distracted largely by that, while there's other things happening, even clandestinely, or whatever, however you want to mention it, regarding so many different people and organizations that are going to be pushing a lot of further restrictions on people internationally. So I've talked about Palantir and psychological operations that they've already been part of, and they've already bragged about it. You know, Alex Karp and others regarding in Europe and other areas. This is going to be massive surveillance internationally as well, overreach. So psychological operations, massive surveillance with RFK Jr., possibly biodigital convergence because of these wearable health devices he's going to be pushing, and possibly new vaccines that are going to be preventing, new diseases, even if we don't know what they are yet. Again, this is all profoundly concerning to me. And then yet again, I'll talk about Elon Musk again, still pushing this whole Mars propaganda campaign. Again, this is for money. And it's really frustrating that there's so much money going towards these organizations like Palantir and SpaceX and these Mars missions and NASA, etc. BlackRock and Raytheon and Lockheed Martin, these friggin' war, what do you call it? Like, what do you call them? Like, not warmongers, war pigs. And so, yeah, it's just frustrating. And so there are concerns, obviously, with people in countries that are considered to be less developed, underdeveloped, and their access to better health services. But I will say, just like what happened in the developed countries, largely we had less infant mortality, and we had less diseases and illnesses once we started having access to cleaner water, waste removal, healthier food, and better living conditions. And so a lot of what we're seeing in all of these different places where we're spending billions of dollars with Gavi and the World Health Organization and Bill and Melinda Gates Foundation and all these philanthropic organizations, again, a lot of this money is not going towards where it needs to go. And their options are just pushing vaccines or pushing drugs and not actually addressing the real issues that are happening within these countries. And so all this money could be going towards what I just mentioned, but instead it's going towards drugs that profit only these friggin' companies, respectfully speaking. And so on that note, sorry for the rant, but again, I've been up since like 2:30 this morning. And now I'm going to get into Carney's shares and ETFs. Why is it doing this to me? I got to go way up. Okay, so I copied and pasted all the companies. And you'll see them here. The English and French versions I did share, but Grok assisted me with not allowing further to be duplicates. But then again, it was a pain in the ass, and so I had to go page by page, and I was counting just to make sure that I was verifying the appropriate amount of companies. I came up with 558. Grok is coming up with 524, I believe it was, and then six ETFs, which they're separating from the shareholdings. Whatever. At this point, close enough. And so again, I'm just showing you all the companies. Okay, so I will review each company listed to determine the country of origin, focusing on incorporation or primary operational headquarters. So I was asking how many of these were American, these companies here. So I copied and pasted, and then how many of these companies are American. And you can see I misspelled many, too many M's. I don't care. So Grok originally said 308 unique entries. I tried this with ChatGPT, but I'm so frustrated again because it's not giving accurate information at all about anything at this point. And even when I'm copying and pasting what's coming from Grok, it's not. Anyway, it's not helping. So even when it was analyzing, again, this is a low number. This is incorrect, but I'll get into it. He categorized them in different companies and accounted for possible duplicates. And then I was asking him not to do that because if they're named differently, it means they are different companies. And so total non-American companies out of the alleged 308, again, there's more. Let me be clear. I'm just showing you, again, how friggin' long and how much of a pain in the ass and tedious this can be. Total non-American companies, 26. The following are investment vehicles, not individual companies, and are excluded from the count. So these shares, these ETFs, by the way, are concerning because even State Street, BlackRock, first of all, is on that as well. And so ETFs, mutual fund 6. So he's saying that 276 out of the 302 companies, excluding those ETFs, were American companies. So I asked what percentage. So I had said I had come up with 560. Again, that was a really fast count. And he's saying no, Grok saying no, but anyway. So 91.39% of the companies that Grok had came up with at that point were American owned. And so I gave these lists, and the 6 entries you listed are exchange traded funds, ETFs, not individual companies. These are investment vehicles that track specific indices, bonds, or markets, and they were excluded from the company count in my previous response because they are not operating companies, but rather funds. Then this is still important. For clarity, here's a brief explanation of each. So iShares 1 to 3 year Treasury bond ETF tracks US Treasury bonds with maturities of 1 to 3 years. iShares Core S&P Mid-Cap ETF tracks the S&P Mid-Cap 400 Index, representing mid-cap U.S. companies. Again, U.S. iShares MSCI Emerging Markets ETF tracks the MSCI Emerging Markets Index, covering companies in emerging markets internationally. iShares MSCI Japan ETF tracks the MSCI Japan Index, representing Japanese companies. I'm wondering if we're doing any contracts with Japan since Carney has been in office. Anyway, iShares MSCI United Kingdom ETF tracks the MSCI United Kingdom Index, representing UK companies. And then you've got the SPDR S&P 500 Trust ETF tracks the S&P 500 Index, representing large cap US companies. Okay, so they're not counted as companies. So I just wanted to give a breakdown for people. An ETF, exchange traded fund, is a type of investment fund that is traded on stock exchanges, similar to individual stocks. It pools money from multiple investors to purchase a diversified portfolio of assets, such as stocks, bonds, or commodities, and is designed to track the performance of a specific index sector or asset class. Here's the breakdown. I just wanted to make sure that I had my mic on. Sorry. Structure. ETFs hold a basket of assets, example stocks, bonds, and issue shares that investors can buy or sell on exchanges throughout the trading day at market price. Tracking. Most ETFs aim to replicate the performance of a specific index, example the S&P 500, MSCI Japan, or sector. Technology, emerging markets. Liquidity. ETFs can be bought or sold like stocks, offering high liquidity and flexibility compared to mutual funds, which are typically priced once daily. Diversification. By holding multiple assets, ETFs provide diversification, reducing the risk associated with investing in a single stock or bond. Cost effectiveness. ETFs often have lower expense ratios than actively managed mutual funds because many are passively managed to track an index. Transparency. ETFs typically disclose their holdings daily, allowing investors to see exactly what assets they own. And so, again, it's giving me the examples again. So then I asked who manages these specific ETFs. And so the 6 ETFs you listed are managed by well-known US-based asset management firms. US-based asset management firms. Below is a specific manager for each ETF. The 1 to 3 year Treasury bond ETF, managed by BlackRock, is a leading international asset management firm headquartered in New York, USA. And there's a lot of contracts with BlackRock, i.e., even in Ukraine and so many other areas. Again, this is a conflict of interest, but I'm going to get into it. iShares Core S&P Mid-Cap ETF, managed by BlackRock Incorporated, the same firm as above. Shares an MSCI Emerging Markets ETF, managed by BlackRock Inc., the same firm as above. Again, this one too, BlackRock, same firm as above. UK, managed by BlackRock, same firm as above. And S&P 500 Trust, managed by State Street Global Advisors, a major asset management firm headquartered in Boston, Massachusetts, USA. All American. So both firms are American, confirming these ETFs are managed by US-based companies. Oh, that's another rabbit hole. Anyway. Sorry, I was listening to Ian Carroll a little bit this morning, and some weird shit came out, and I just wanted to confirm. But I don't know. I'm not going to go down that rabbit hole because I need to focus. So I gave the appendix, a summary of statements of the holdings, and so I said how many companies are listed here. English side only, please. And so the document spans multiple pages with English entries consistently labeled as shares of. I will count these entries excluding the 6 ETFs previously identified in our conversation, which appear in the document. So then I just, so it says page 2, which is the start of the companies, 40 companies, page 336. Again, I counted 40 there. Page 4, 40, page 5, 40, page 6, 40, page 7, 39. I was on that page. Page 8, 25, I had 40. So again, this is why there's some conflicts here. Page 9, 10, 11, 40, page 12, 39, page 13, 39, I had 40. And page 14, I had 40 entries, not 2. And then page 15, 40, and then page 16, 10. And so, and then it gives me all these breakdowns. So I'm going to keep on scrolling down here till we get to the more accurate information, because I literally had to post page by page all of these entries. So then it's saying 391 entries and 6 ETFs. And again, just going off from there. How many are American? Over 92% still. Again, why? And Canadian companies? Okay. Okay, so I gave them the breakdown. Didn't understand what I was saying, but that's fine. Again, just to show you just how frustrating this can be when you're trying to confirm all this stuff. But then it came to 444. All right, so there were, again, still not accurate. Possible duplication? Nope. And then it gave me a list of the companies. Again. So total companies, 444, non-American companies, 28, American companies, 416. But again, that's still a 93.69%. Again, like over 90% of the companies that he has shares in and ETFs are American. So then I went page by page, copy and paste. So frustrating. It's giving me a breakdown again, copy and paste. So then at one point, I was basically saying, just 1 second here. It's because it's giving me all this friggin' list. And I'm like, let me copy and paste each page before commenting until the end, please. And then understood, I'll wait for you to provide the pages before commenting or analyzing. Please go ahead and share the remaining pages, and I'll compile the full analysis once you've submitted everything. And so I'm going down page by page. Full transparency here, just the English side. Thank you for sharing. You're welcome. This is very frustrating. And then it's showing me the stock market and stuff. Anyway. More. Lots of pages, 16 pages in total. Okay. So then I gave them all, I think, at the... Nope, not done yet. Okay, some of the shares of entries across the provided pages 2 through 16 to confirm the total number of entries. That said, handle duplicates and errors, identify and consolidated duplicates, i.e. Aon PLC and Aon Public Limited. Again, I don't think those are different companies. And then Amotech for Amotech, maybe. So still trying to reconcile the 558, which I don't care about. I'm like, you're the AI. You do the friggin' math. So then counting total entries gives me all of these. So page 2, 3, 4, 5, 6, all the way through page 16. And then it says 453 entries. 38, 39, 40, 40, 40, 39, 40, 40, 40, 40, 39, 40, 39, and then this should be 40, and then 10. And so again, I'm frustrated again with this. I mean, not in frustrated, like as in like, oh my God, but just like, oh my God, rolling my eyes frustrated. I don't get too worked up about this stuff, or else I would not be doing this for the amount of years I've been doing it. You got to let a lot of things slide off your back or roll off your back, whatever you call it. All right. Let's see what other question I answer. Anyways, it's breaking it all down. And then I say, okay, now analyze the companies. I do not use the duplicate point because if the companies are named differently, they are different. Okay, so then it's looking through page 2 through 16. And saying there's 453 entries. We're almost there. So then again, it's giving me the breakdown. Page 15, 0 entries, no valid shares of entries. The original document has an OCR error, so I reshared, but anyway. Almost there. And if you look at all these companies, I was looking at like Palantir, like what, like all these companies that the clear conflicts of interest. So even still staying, like over 90% of the companies are owned by America, by America. Okay. So thank you for providing the entries for page 15 and for continuing to share the pages. I now have all the entries from page 2 through 16 of the document Carney Appendix Summary Statement. And count total entries, some of the shares of entries, page 2 through 16, confirm total number of entries. Exclude non-companies, remove the 6 ETFs, all on page 9. They are investment vehicles, not companies, but they're important, very important. Okay, so then it goes again with counting total entries. So then it gives me 38, 39, 40, 40, 40, 39, 40, 40, 40, 40, 39, 40, 39, 40, 10. Comes up with 484. And then so I'm like, that's doesn't look right. So then I'm on my friggin' calculator, and it was giving me this friggin' all the breakdowns again. How cute. And then it's telling me again, 445, still short of 558, whatever. And so you keep talking about 558 old news, and you did not understand what I said. Page 2 through 39 entries, page 3 through 11, there are 40 entries. Page 12, I counted 39. Pages 13 through 15, I counted 40 entries. Page 16, I counted 10. Then I gave the breakdown. I'm like, that's how I came up with 568. I used a freaking calculator, right? Anyway. So that clarified that it was correct. And then again, going on this freaking long tangent, breaking down the exact same information. And then, so I took Grok's information, and I'm like, okay, you're saying 38, 39, 40, 40, 40, 39, 40, 40, 40, 40, 39, 40, 39, 40, 10 does not equal 44, because that's what Grok was saying. I'm like, it equals 424, does it not? And then you're absolutely correct, and I apologize for the oversight in my previous response. It took so long to get there. So I'm like, how is Grok not able to do math? But anyways, let's recalculate the total number of entries based on the counts you provided for each page to clarify the discrepancy, and then determine how many of these companies are American, adhering to your instruction to treat differently named companies as distinct. So anyway, more of that. So we're at 524 now. Sure, I don't care at this point. I'm still thinking it's closer to 568. Maybe I'm wrong. Maybe it's 564. I don't know. But over 560 companies, in my humble opinion. But Grok, sure. So the following companies are incorporated or primarily headquartered outside the U.S. 3i Group PLC, it's the UK. Accenture PLC, page 2, Ireland. Adian PLC, page 2, Ireland. Adian NV page 2, Netherlands. Aon PLC, Ireland. Aon Public Limited, Ireland. APTIV PLC, Ireland. Arch Capital Group, Bermuda. Arch Capital Group, Bermuda. ASM International NV, Netherlands. And that's not to include his tax havens in Bermuda and the Cayman Islands and other areas, just to be clear. BAE Systems PLC, UK. Oh, look at this, Canadian Natural Resources, page 4, Canada. Canadian Pacific, Kansas City, interesting. Canada. Compass Group PLC, page 5, UK. CRH PLC, Ireland. Experian PLC, UK. Ferrari NV, Netherlands, Italy. Heineken Core, Netherlands. ICICI Bank Incorporated, India. Icon PLC, a lot of Ireland, a lot of UK, a couple of Canada. I think I saw 2 there. And shouldn't most of his companies be Canadian? Switzerland, Ireland, Taiwan, Ireland, Germany, Luxembourg, Singapore, France, Germany. Spotify Technologies in Luxembourg. Interesting. Wasn't Spotify like a Canadian company at one point? Anyways, American companies total 518. Non-American companies 39. And so 92.47% we got to. Over 90% of Carney's shares, like in these companies, are American. And then 6 ETFs, all American. I don't care about the account about 568 anymore. We're over that, but still, it was still pushing over 90%. And then like 95% if you count the ETFs. So then I asked, how many of the listed companies profit from the wars in Ukraine, Russia, Israel, Palestine, green energy, carbon tax, or other major events internationally in the past 5 years? I'm just saying the last 5 years, even though he was the head of Bank of Canada, 2008 to 2013, I believe it was. And he did a terrible job. And even when he was in England, did a terrible job. Even the prime minister there said that. on the record, I shared that. And then he was financial advisor during COVID. So not just in 2020, but after that as well. And I shared a post from 2021 where I said that he should be in jail. So again, I've been tracking Carney now for literally years. So none of this is new to me or a surprise. And I'm like, oh my God, if this guy gets in to be freaking leader, because I see the writing on the wall, even with Pierre Poilievre, years before he was slated to be the leader of the Conservative Party, I was calling it. And it is what it is. Anyway, to determine how many of the 518 companies listed in the English side shares and entries from pages 2 through 16 of the Carney's appendix summary statement, I'll analyze the companies in the context of these events. The analysis will focus on industries and companies likely to have benefited using standard corporate data, financial performance indicators, and relevant information from the provided web and ex post references, blah, blah, blah. So Russian, and again, misinformation, but define profit context, wars in Ukraine, Russia, Ukraine's invasion of Ukraine. Sorry, scratch that. Russia's invasion, I'm just reading this off of Grok. Russia's invasion of Ukraine, a proxy war that's benefiting these shareholders, February 2022 to present. And again, I called that weeks before it happened. Caused energy price spikes, supply chain disruptions, and increased defense spending. Companies in oil, gas, defense, and commodities likely profited. They absolutely did. Israel-Palestine conflict. The conflict escalating since October 2023 has impacted oil, gas, defense, and regional economies. Direct profiteering is limited. Bullshit, as neither Israel nor Gaza is a major oil producer, but related industries may benefit. This is where we're going with this. And assets given and aid given. I'm going to get to that. Green energy. The international push for renewables, accelerated by the Ukraine energy crisis and climate policies, benefits companies in solar, wind, hydrogen, and clean tech as well. Carbon tax policies taxing carbon emissions, example in Europe, Canada, affect energy-intensive firms negatively, but benefit green energy or carbon offset providers. Other major events include COVID-19 recovery, 2020, 2022, supply chain disruptions, and geopolitical tensions. Israel-Iran escalation since June 2025. Identify relevant industries, so oil, gas, benefited from price spikes post-Ukraine invasion and Middle East tensions, and then it gives examples. Defense, aerospace, increased demand due to Ukraine and Israel conflicts, and others. Green energy gained from Europe's shift from Russian gas and renewable investments. Carbon tax offset benefits firms offering carbon credits or compliance solutions. And what's Carney pushing for? Like I've been saying for friggin' years, carbon credits. He's trying to push that. Again, it's money for him and his friggin' shareholders, guys. Like literally, I said this for years, but then I also have on the record videos. One of them is called Chili Con Carney from like friggin' 17 friggin' weeks ago. And I was saying like this, like he's not sharing this now because if people are smart enough to actually look at this, they're not going to vote for him. But anyway, commodities tech affected by supply chain sanctions or recovery, match companies to industries. And so cross-reference 518 companies with industries likely to profit using their primary business activities. Example via SEC filings, company profiles. And again, a lot of this is not going to be released anyways. Okay, so for oil, gas, invasion, energy prices spiked, led to $281 billion in profits for major oil firms, BP, Shell, Chevron, ExxonMobil, Total Energies since February 2022. Russian oil revenues rose to $18.8 billion in September 2023. Defense increased NATO and Ukraine spending, boosted defense contractors, Lockheed Martin, Boeing, Raytheon, etc. Commodities, agriculture, and metal exporters, example, Archer Daniels Midland, benefited from disrupted Ukrainian exports. Energy-intensive firms faced higher costs, reducing profits unless hedged. Okay, so you got oil, gas, limited direct impact as, yeah, that's fair. But potential Iranian involvement could spike prices. Defense, Israel's military actions increased demand for defense equipment. Aid there. And again, even what we're giving as aid to companies, to countries, like a lot of this is not making it. I keep friggin' saying, anyway. Yeah, a lot of people dying there. Anyway, green energy, Europe's shift from Russian gas post-2023 to accelerated renewable investments, solar, wind, etc. Firms in solar, example, First Solar, not listed. Wind or clean tech benefited, though some green firms face environmental costs. Cobalt mining, sure. Other events, Tech, healthcare, and consumer good firms for COVID-19 recovery. Amazon, Pfizer, profited from digitization and vaccine demand, and so did like Moderna and J&J and countless others. Supply chain disruptions. Still talking about oil here. So the list contains 518 companies. I'll identify companies in industries likely to profit, focusing on oil, gas, green energy, carbon-related services, and major event beneficiaries. So on page 5, Chevron Core. Oil gas companies profited from these wars. Chevron Core alone, page 5, 53 billion profits since 2022. ConocoPhillips, page 5, benefited from global oil price spikes. EOG Resource Inc., page 7, oil gas exploration profited from price surges. ExxonMobil Corp., page 7, 56 billion profit in 2022 boosted by the friggin' proxy wars. Occidental Petroleum Corp., page 11, gain from oil price volatility. Marathon Petroleum Corp., page 10. He's got so many investments in oil. Doesn't he not like oil? Anyway, refining and marketing benefited from high fuel prices. Phillips 66, page 12, refining profited from price spikes. Valero Energy Corp., page 15, refining gained from energy market disruptions. Hess Corp., page 8, involved in Chevron's 53 billion acquisition, profited from oil markets. Canadian Natural Resources, Canadian Oil Gas, benefited from international price increases. Coterra Energy Incorporated, page 5, natural gas profited from LNG demand post. They keep on saying Ukrainian invasion. Anyway, so many lies about that, and I got videos on it. Diamondback Energy Incorporated, page 6, oil gas production gained from price surges. Permian Resource Corp., page 12, oil gas exploration benefited from market dynamics. HF Sinclair Corp., page 8, refining profited from high fuel prices. Ovintiv Inc., page 11, oil gas benefited from North American energy demand. 15 friggin' just oil and gas companies alone that this guy is profiting from and has in the past. Defense aerospace companies profited from these friggin' wars, proxy wars. Boeing Company, page 4, defense contractor, increased demand for military equipment. Lockheed Martin Corp., page 10, major defense supplier, profited from NATO Ukraine contracts. Northrop Grumman Corp., who I've also friggin' mentioned for years, and Marco Mendicino and his wife, by the way, also had shares and stocks in that friggin' company. I'm like, how is this not a conflict of interest as a public safety officer? These people in cabinet and a lot of people in the House of Commons, like, they literally need to be investigated and fired. I'm so frustrated that this is not happening yet. Anyway, RTX Corp., page 13, formerly Raytheon, profited from missile defense system and drones and so many other like so much more equipment. So that's just like a small part of it. Massive amounts of profits. Huntington Ingalls Industries Incorporated, page 8, naval defense increased demand. GE Aerospace, page 8, defense-related aviation benefited from military spending. Textron Corp., page 14, defense and aviation profited from conflict-driven demand. Digm Group Incorporated, page 14, aerospace components, indirect beneficiary, 8 companies there. Green energy companies. Few listed companies are pure play green energy firms, but some have significant renewable energy segments. So this is only a few of the multiple that he has shares in. And it's blind trust my ass. Anyways, Nextera Energy Incorporated, page 11, largest U.S. renewable energy provider, wind solar, profited from Europe's shift post-Ukraine. GE Vernova LLC, page 8, renewable energy and power generation, benefited from clean energy investments. Atmos Filtration Technologies, page 3, filtration for energy systems, indirect beneficiary of green tech demand. 3 companies note most green energy profits go to unlisted firms, example First Solar, or smaller divisions of listed companies. So you're not going to get the full deal there. Carbon tax offset companies. No listed companies are primary carbon offset providers, but some benefit indirectly. You've got Nextera Energy Incorporated, already counted. Renewable energy reduces carbon tax exposure. GE Vernova LLC, already counted. Clean energy solutions align with carbon tax incentives. Potential others, companies like Microsoft Corp., page 10, invest in carbon offsets, but profits are primarily from tech, not carbon tax directly, but still you're still making money, the company in itself. So however you get that friggin' money for the company, it's still benefiting him. Other major events, COVID-19 supply chains, geopolitical tensions. I could have got so much into COVID-19, but anyway, tech companies, COVID-19 digitization, supply chain resilience. Alphabet Inc., page 2. Google, profited from digital demand. Amazon, Page 2, e-commerce and cloud computing surge during COVID-19. Apple Incorporated. Page 3, strong consumer electronics demand. Microsoft Core. Page 10, cloud and software growth during remote work. Meta Platforms. Page 10, Adobe Inc. Page 2, Autodesk. Page 3, Cisco Systems. Page 5, Intel Core, semiconductors for tech infrastructure, page 9, NVIDIA Core, page 11, AI and chip demand surged. And what is he pushing for right now? Who did he just hire as a cabinet minister? A friggin' crony of his, and who's also like doing like shady art dealings and stuff like that. But anyways, we now have a new AI cabinet minister, new position. So brutal. Salesforce Incorporated, page 13, cloud-based CRM growth. ServiceNow Incorporated, page 13. CrowdStrike Holdings, page 5. Datadog, page 6. Snowflake, page 13. Workday Inc., page 16. Zoom Communications, page 16. I don't even see anything in Palantir here yet. But anyways, I'm going through the whole list. Healthcare Pharma, Pfizer Incorporated, page 12. Eli Lilly & Co., page 6. Gilead Sciences, page 8. Amgen Inc., page 2. Biogen, page 3. Biomarin Pharmaceutical, page 3. Regeneron Pharmaceutical Inc., page 12. Friggin' Moderna, page 10. Commodities Agriculture, Archer Daniels Midland Company, Corteva, page 3 and page 5. Logistics Supply Chain, FedEx, page 7. United Parcel Service Inc., page 15. Old Dominion Freight Line Inc., page 11. Companies, 30 companies, 17 tech, 8 healthcare, 2 commodities, 3 logistical, and again, there's more, but again, those are just blatantly obvious. And so 56 companies total is what they're alleging. And I'm alleging are 56. I don't give a shit anymore about the 568. I already said I was over it. Final answer is still giving me that. And so, okay, so I'm going to say keep things based on 524. Entries, 518 companies for now, please. You did not list the ETFs that profited, such as BlackRock or Palantir. Please assess. Okay, so the provided documents are for pointing out that I missed discussing ETFs like BlackRock shares companies like Palantir Technologies in the context of profiting from the specified events. I apologize for the oversight. I'll reanalyze the 518 companies to determine how many profited from the wars and all this other green energy stuff, carbon tax, or major international events, ensuring to include relevant companies like Palantir Technologies Incorporated and addressing the 6 ETFs. All right, so Ukraine-Russian war, 2022 to present, benefits so many different ways. So oil, gas, defense, commodities, and tech, and real estate. Anyway, this one, Israel-Palestine, benefits oil, gas, potential price volatility, defense contracts, and tech, surveillance, intelligence. There's more than that as well, because and even the aid we're giving. Green energy, renewables, solar, wind due to Europe's shift from and Canada to carbon tax. And again, it's just stealing our money. So like, you don't need investments in it because I shouldn't have even listed that because again, you're just stealing our friggin' money and putting it towards things that are not helping the environment anyways. And shredding friggin' millions of trees in Ontario alone, overdeveloping us in areas. And again, it's not helping Canadians at all. And it surged house prices and making it where there's going to be more surface heat. We're already seeing heat impacts, surface heat. And they're talking about blocking out the sun while they're shredding trees, like and overdeveloping our areas. Mind blowing. So we're still talking about this. Match companies to industries. All right. Still doing this. Per your instruction, differently named companies are treated as distinct, giving me these as examples. All right, scrolling down here. So Chevron Core, ConocoPhillips, EOG Resources, ExxonMobil, Occidental Petroleum. There's all of these that I listed already. So 15 companies, 8 companies. And again, there's more for that for defense aerospace. Green, tech, 18. So Palantir's inclusion is critical. Thanks for adding it when I asked. As Expos highlight its role in so many different operations, but they're not even saying the U.S., which is wild to me. Healthcare Pharma, when he was a financial advisor. Like, I just, I get so frustrated even saying this out loud. What reality are we in right now? Like this friggin' Matrix, like I don't understand. Anyway, yeah. So if you think that he's going to actually address the pandemic and what actually happened and all the side effects and so many other issues, not aspirating needles, etc. No, this guy needs to resign. There needs to be some kind of like a vote of non-confidence or people to look at these conflicts of interest and have it where, oh yeah, he can't be our leader or working within the Canadian government in any capacity. Logistics, FedEx, United Parcel Service, Old Dominion. So there's more companies. 57. I would argue there's more than that, but again, and then the 6 ETFs. Okay, so Treasury bond, BlackRock tracks U.S. Treasury bonds minimally affected by conflicts or green energy as bond prices are stable. Sure. Tracks mid-cap U.S. companies, including some tech, Palantir, and energy likely profited from conflict-driven sectors. So there you go. So you've got the emerging markets ETF. BlackRock includes Chinese firms, i.e., Jesus, Meituan, but limited exposure to conflict profiteers, minimal direct profit, but indirect. BlackRock includes Japanese firms, example Mitsubishi Heavy Industries, which profited from defense demand but limited overall impact. Sure. Includes UK firms but minimal conflict related profit. Okay, so okay, we don't need conflict related. Like, let's look how much money they've made since since 2020 at least. Like, I'm not even going back to 2008. Chevron, Lockheed Martin, Microsoft, Palantir likely profited significantly from the S&P 500 trust. Okay, that's obvious. State Street. This should be obvious to people. So two that they're sharing. So 64 entries where he's directly profiting from, and others where he's indirectly profiting from these friggin' events that we're giving money to. Okay. Okay. So out of the companies and ETFs you have identified that Carney has shares in, how much did he make from 2020 to present day? Would this be a conflict of interest since he was the financial advisor during COVID and 2020 as well as the current Canadian Prime Minister? So this is from Grok. To address your query, I'll analyze potential financial gains made by Carney from the 518 companies and 6 ETFs, blah, blah, blah. Okay, so data limitations, asset details. The document lists 524 entries placed in a blind trust, but does not specify the number of shares, purchase dates, or sales dates. I have to go through all of that. Carney's disclosure indicates he held stock options and deferred shares in Brookfield entitled entities shared in Stripe, Cultivo, Land BPC, Watershed Technologies Inc., and a third-party managed investment account with over 560 companies, likely including the 518 listed. Yeah. And again, to corrupt people within his government that he friggin' appointed. Because he doesn't nominate. They're essentially appointed, and then it's the governor general that just rubber stamps it with no checks and balances, no transparency. Like, oh, this is the list you want for to be the cabinet member? Sure. We're not going to ask them any questions. We're not going to ask them any of their friggin' corruption since they've been in office. No, none of that. Let's just approve this. Brookfield and Stripe. Carney held 6.8 million in Brookfield stock options as of December 2024. Now worth 4.8 million due to share price drop. Again, that's going to go up under, like, I guarantee it. All right, so just going through here. It's hard to get, again, you're not going to get accurate assessments, but it's going to be in the millions of dollars. Okay, so conflict of interest analysis. That's what I cared more about. Roles and context. Carney was an informal advisor to Justin Trudeau during the COVID-19 pandemic, not a formal government role requiring ethics disclosures. So I want to know, like, I should have looked at this before this, but was he paid? So what does informal mean in this capacity, right? And even if he was informal and not paid for it, his advice, if he's making money off of that through his shares and his ETFs, then I absolutely say that he's friggin' paid. Look into it, lawyers. I don't know. Liberal Party Economic Growth Task Force Chair. Appointed by Trudeau, Carney was employed by the Liberal Party, not the Prime Minister's office, exempting him from standard conflict of interest disclosures. How convenient. Prime Minister, March 2025 to present. Blech, I hate even friggin' saying that. Anyway, Carney placed all assets in a blind trust before taking office. Oh, it's okay then. With a conflict of interest screen managed by Marc-André Blanchard and Michael Sabia to avoid decisions benefiting Brookfield, Stripe, and other holdings. We're not dumb. Like, even I would be able to predict what to do to benefit Brookfield and these other organizations. Am I making more houses? I don't know. more real estate. I don't know. Anyway, I'm just not going to get into that right now because I got to focus. Conflict of interest assessment. Under Canada's Conflict of Interest Act, public office holders, example Prime Minister and advisors, must avoid decisions that could benefit their personal financial interests. Carney's roles raise potential conflicts due to his investments and past affiliations. COVID-19 Advisor 2020-2022, potential conflict. Carney's investments in healthcare pharma, example Pfizer, Moderna, and tech, example Amazon, Microsoft, likely profited from COVID-19 policies, example vaccine contracts, digitization. His informal advisory role involved economic recovery advice. Look how that was handled. I'm stuttering. I'm so frustrated. Potentially influencing policies benefiting these sectors. Mitigation. As an informal advisor, Carney was not subject to formal ethics rules. No evidence suggests he directly influenced specific contracts, vaccine deals, which is bullshit. And by the way, he is the godparent of Chrystia Freeland's son, and they all hang out. Even Doug Ford, like this guy, like hanging out with Chrystia Freeland just like a couple weekends ago or whatever. Fake friggin' conservative. I did not vote for him. I did vote conservative because again, we can't have. Anyways, I was like, we can't have the liberals in, but look what friggin' happened. Go boomers. Anyway, and people that got here in the last 5 years. His advice was broad, not company specific. Conclusion, low conflict risk. I argue against that, as his role was advisory, not decision making, and no disclosures were required. However, opposition critics argue his investments in profiteering companies, example, over $270,000 worth of hypothetical tech gains, I'm saying it's way more than that, could raise perceptions of bias. Yeah, no shit. And by being informal, again, that's his way out. Like, this is frustrating. Liberal Party Task Force Chair, 2024, potential conflict. Brookfield Asset Management, where Carney was chair until January 2025, sought $10 billion in taxpayer funds for a $50 billion Canada-only asset fund in September 2024, shortly after his appointment. And by the way, he moved Brookfield to the US, and so there's that as well. His holdings in oil, gas, example Canadian Natural Resources, and green energy, example Nextera, align with energy policy discussions. Mitigation. Carney's Liberal Party role exempted him from government ethics disclosures. No evidence confirms he directly lobbied for Brookfield funds. Like, I just can't with this. His task force focused on economic growth, not specific investments. My ass. Conclusion, moderate conflict risk due to Brookfield's lobbying and Carney's 6.8 million options. Conservative criticism highlights perceived ethics loopholes. Yeah, they are loopholes, but no direct evidence of improper influence, which is disgusting to me. Prime Minister 2025 to present, potential conflict. Carney's blind trust holds 518 companies, including 57 profiteers. Example, Lockheed Martin, Palantir, Chevron, worth over $500,000 more than that, plus 4.8 million in Brookfield options. His policies, example, scrap and consumer carbon tax, investment in infrastructure can benefit these sectors. For example, defense spending commitments, NATO, U.S. missile shields can boost Lockheed Martin, and infrastructure funds could align with Brookfield's interests. Again, mitigation. His blind trust. Oh, I can't see it. Come on. Screen prevent him from knowing or influencing trust decisions. The screen managed by Blanchard and Sabia, and I want to know I wonder what their shares are and what kind of holdings they have, these ETFs. Block's involvement in Brookfield Strike matters. He disclosed assets to the ethics commissioner exceeding legal requirements. Oh my God, exceeding legal requirements. Opposition demands for full disclosure. Note that blind trusts don't eliminate knowledge of prior holdings. No shit. Potentially influencing broad policies. Example, energy defense. Critical examination. The establishment narrative, blind trust eliminates conflicts, is questioned by experts like Ian Stedman, who note Carney knows his holdings. We all do now. Example, Brookfield options until 2033, 2034, creating a perception of conflict. Conservatives argue his energy and infrastructure policies could indirectly benefit his portfolio. No direct evidence shows Carney making company-specific decisions, but broad policy impacts, example, oil, gas, defense, align with his holdings. So conclusion, moderate to high conflict risk due to the scale of his portfolio and past Brookfield role. The blind trust and screen mitigate direct influence, but perceptions of bias persist, and they will continue to, because there are biases there, especially with defense, Palantir, Lockheed Martin, and energy, Chevron, Nextera, etc., and other companies, BlackRock. My God. Conflict of interest. Low risk, informal role, no formal ethics requirements, brutal. Liberal task force chair, moderate risk, Brookfield's funds, prime minister, moderate to high risk, large portfolio. Despite blind trust in screen policies in defense, energy, and infrastructure could indirectly benefit holdings. There are no direct violations are confirmed. Of course, they're not. Why? Because like even in the legal system right now, we have a two-tier justice system, and the people that he has in place at the highest friggin' levels, like the judges and lawyers and all these friggin' people, heads of the RCMP, etc., they're all blindly following him. Anything he does, just like Trudeau, it's gonna be overlooked. So Carney has approved billions of dollars in aid to Ukraine. What companies profit? So determine which of the companies. Okay, so military aid, $2 billion funds drones, ammunition, armored vehicles, and helicopters, benefiting defense contractors, aerospace firms, and technology companies involved in military systems. Infrastructure loans, $2.3 billion, supports rebuilding Ukraine's civilian infrastructure, example, buildings, energy systems, potentially benefiting construction, engineers, and energy firms, example, BlackRock. Sanctions on Russia's shadow fleet, targets energy revenues indirectly affecting oil gas firms. Identify relevant industries, so defense, aerospace, companies supply weapons, drones, or military, so Lockheed Martin, Boeing, profit from military aid. Technology firms providing cybersecurity, AI, or drone technologies, examples Palantir, benefit from military intelligence needs and beyond that. Infrastructure, energy, companies in construction, engineering, or energy. Renewable energy may profit from infrastructure loans, oil, gas, indirect benefits from sanctions, driven energy price volatility, etc. ETFs assess whether the 6 ETFs hold profit-sharing companies applying gains. And so match tech count profiteers anyways. And then it's counting them all again. All right, don't care about this anymore, blah, blah, blah. But yeah, it's showing a clear conflict of interest here. So Palantir, CrowdStrike, Microsoft, NVIDIA. Again, it's not just in Ukraine. But 2.3 billion loan targets civilian infrastructure. Nextera, GE Vernova, Jacobs Engineering, BlackRock. All these companies for oil and gas. So profiting ETFs, iShares Core S&P Mid Cap ETF, and SPDR S&P 500 Trust ETF BlackRock. Direct versus indirect profits, defense firms directly benefit from military aid as Canada's funds likely purchase U.S. NATO equipment. Infrastructure and tech firms have less direct exposure as loans may go to European contractors. Oil gas profits are indirect, driven by sanctions, not aid itself. Establishment narrative, sources emphasize Canada's unwavering support but lack details on what companies receive contracts. U.S. aid analysis, 90% stays domestic. U.S. aid, 90% stays domestic. Suggests Canadian aid may similarly benefit allied firms, but no evidence confirms specific contracts for listed companies. Of course it doesn't. And by the way, they're now saying like Melanie Joly, who is freaking so dumb, so incompetent, but all these deals, all these contracts is going to be private and then announced publicly after they're all done. Oh my God. Okay. I wonder why. And I wonder what her shares and stocks are in. Anyways. Without contract details, I assume listed defense tech firms benefit based on their involvement. It's not even just there. There's so many friggin' things we're doing that again are directly impacting or benefiting cabinet and people in the House of Commons. And again, this is what I mean. There's ethical trading and investments, and then there's non-ethical. And so I have been look at my friggin' whiteboards. I've been calling these out for friggin' years. I literally said if I wanted to be rich, I would literally put investments, shares, ETFs, whatever you want to call them, in these specific companies, and I would have been a millionaire by now. So not only did I not do that, because for me that's like supporting and enabling what's going on, and continuing like these mass friggin' genocides and crimes against humanity and atrocities, these false flag operations, etc. And but again, because like they care less about societal impact, social outcome, like they've already admitted multiple times, and more about the profits of the shareholders. And so that is who Mark Carney is beholden to. Let me be clear, it's not Canada. And look how many companies invested in Canada. Like was like what, 2 or 4 or something like that out of 558. Come on. So yeah, Boeing Company, Lockheed Martin, Northrop Grumman, RTX Corps, Huntington Ingalls Industry, GE Aerospace, Textron, Diggum Group, Palantir, CrowdStrike, Microsoft, NVIDIA, and more. Infrastructure, Nextera Energy, GE Vernova, Jacobs Engineering, the oil, lots, oil and gas. Okay. So how is that not a conflict of interest? So to evaluate whether Mark Carney's investments in the 30 companies and 2 ETFs identified as profiting from Canada's 4.3 billion aid to Ukraine. Again, I'm very specific to this. There's like so many other contracts that we need to look into, and aid constitutes a conflict of interest. Given his role as Canadian Prime Minister, sworn in March 2025, I'll analyze the situation under Canada's Conflict of Interest Act 2006 and consider his previous roles as an informal financial advisor during COVID 19, 2020, 2022, and chair of the Liberal Party's Economic Growth Task Force, September 2024 until January 2025. And part of Canada's Growth Task Force, moving Brookfield out of Canada, that in itself, you are fired. You are fired. And it's Canadian taxpayers that are going to be, like, again, impacted profoundly by this for years to come. And they want to come up with this universal basic income still in come September. The analysis will focus on, okay, we're just going here again, investments, yeah, sure. Okay. Okay, so potential conflict, military aid, 2 billion funds drones, ammunition, vehicles, and helicopters directly benefiting US-based defense firms, giving them here. Tech firms, giving them here. In Carney's portfolio, Canada's reliance on NATO standard equipment channels funds those companies. Infrastructure loan supports rebuilding, potentially benefiting all these companies. And by the way, BlackRock, friggin' mentioned BlackRock. Sanctions on Russia's shadow fleet, tightens oil markets, benefiting oil and gas firms. Example, Chevron, Canadian Natural Resources. Yeah, so his companies could benefit from infrastructure-related policies. Blind trust, oh yeah, that's your mitigation. Conflict of interest screen, managed by Marc-Andre Blanchard and Michael Sabia. Just such a joke. Such a joke. Ethics compliance, he discloses assets. First of all, you're supposed to. And it's like exceedingly, like, whatever. We have the right to know. Critical examination. Establishment narrative. The government claims a blind trust and screen eliminate conflicts, but experts like Ian Stedman argue Carney's prior knowledge of his holdings could subconsciously influence broad policy decisions. The trust doesn't erase awareness of past investments, obviously, or ETFs. Perception of bias. Opposition critics, and I don't know why they say opposition critics. Why can't they just say critics? Critics. Okay, so liberals should be calling this out as well. Do you not like your country? Do you hate your country that much? When you see this out there, your people are still like, I just can't. 30 of Carney's companies profit from Ukraine aid. Again, this is just specific to that. Creating a public perception of conflict, especially since his defense spending commitments. Example, NATO, U.S. missile shield aligned with firms like Lockheed Martin, Palantir, etc., etc. Lack of specificity. No evidence shows Carney's directly allocated aid to specific companies. Military aid likely flows through U.S. NATO channels, and infrastructure loans may prioritize non-listed firms. Also very important. Brookfield concerns, still there. Moderate to high risk. The blind trust can screen legally mitigate direct influence. Again, these are loopholes. But the scale of Carney's investments and his role in approving 4.3 billion in aid, again, this is above and beyond what we've already given. A lot of it not going to Ukraine, I will reiterate that. And it's creating a friggin' genocide and destroying countries here. Create a strong perception of conflict. Broad policy decisions, example, military spending and sanctions, could indirectly benefit his portfolio, raising ethical concerns under Section 4 of the Act, though no direct violations are proven. Public trust is strained by opposition claims and conflicts Brookfield ties. I hate that they say opposition. Anyone that loves your country should be looking in this. If you are a lawyer or a judge or anyone in the legal system, oh, poor Smokey. Are you okay? I don't know what happened. I think his leg is a little sore. Anyway. Okay. Okay, so final answer. Carney's investments, there's more than 30 companies and 2 ETFs, by the way. Just within Ukraine alone, benefits pose a moderate to high conflict of interest risk as Prime Minister, March 2025 to present. The Conflict of Interest Act is mitigated by his blind trust and conflict of interest screen, which prevent direct influence on aid allocations. So disgusting. Like, he's a friggin' Prime Minister, and he knows what his shares and stocks are in. And so, So yeah, that's my tangent for the morning. I'm exhausted. I might freaking take a nap at this point because again, since 2:30 in the morning, I've been like looking at all of this stuff. It's absolutely incredible that there's not more people that are addressing this, especially on the liberal side. Like it's just so frustrating. And I'll just full transparency here. Here's the appendix I'm talking about, the original here, and so I will link it. And I already shared it on my X feed, and then you can take a look for this yourself. So anyway, that's this video for the morning. On that note, I will leave it at that. And I hope that everyone has a wonderful rest of your Sunday, and God bless.